The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Welcome on this, 27th day of January. My pleasure to be here Monday through Friday, Tiger Technicians Hour, 11 o'clock till noon Eastern Time, 877-927-6648. Great program as always. We had start off at 8 o'clock. I'm just trying to think. It is Wednesday, of course. So we started with John Logan. Great show. Go to Larry Pesaventa, another fabulous show. Tom and Tommy, wow, what a lot of information we got from them earlier on. Fabulous show. I hope I can give you the same kind of information. Think or swim. What can I tell you? Swimming lessons, boy, what a lot of stuff they know about options and position placing. It's just that is really terrific. Then of course, what have you got? You got Steve Rhodes. Steve comes in with a compendium. I mean, if ever anyone has studied all the different techniques and put it into a package, that's Steve Rhodes. You've got Dave White, very selective trading techniques. He likes to step aside when he wants to, and he likes to go right in, full ball when all these indicators give him the signals that there's going to be a big move ahead. Wow, this is terrific stuff. So, and then you got Tom O'Brien back again at 3 o'clock till 5. So let's get into the nitty-gritties. The S&P futures are down 750 right now. You see, this is only peak A. The technicals are sort of improving, and we often get the stumbling at the bottom. This is amazing because Apple is down 5.5 at 94. You've got earnings came out in many Dow stocks, and in fact, UTX, United Technology, if I can see across that way over there. Now, let me just put it in here. United Technology didn't come out with anything very good, but it's up $1.48, leg B. It's a start of something. So I'm going to go into all the little nitty-gritties. And in the meantime, back at the ranch, besides the little telephone that went right there, what I'm impressed with is the support that we've been trying to form here over the last 4 or 5 days. What I'm not impressed with is I really do like to see a V-shaped bottom with the MACD and stochastic just reversing powerfully, with the stochastic going right back above 20% from the single digits right into the 35, 36% within 4 or 5 days. To me, that's important. So this is telling me a whole story. The fact that GE right now is G's down 19 cents at 28.12. It's telling me that this market is doing some struggling. So we're going to go into the whole nitty-gritties. Let me do this. I want to show you something. Let me finish the numbers because I'm liable to forget. And the next thing I know, it's already the break's coming and it's late. The Dow's down 101 at 16,065. Has made peak B. It needs to go above 16,185.79. 1 penny above extends leg B. 1 penny below, 2 pennies below, and we've still, or more, and we are at a peak B. I'll talk about a whole bunch of things that go on there. Let me finish this up. S&P, so the Dow needs to get to 16,200 and needs to do it fairly quickly. I would like to see it by Friday rather than 15,600. S&P, holding much better than the Dow. It's only down, well, now it's down 0.48%. Dow's down 0.67. There was a much better disparity with the S&P 500 being much better earlier on. And we can't exclude the fact that Boeing is a big part, and Boeing was down very sharply. Let me just tell you right now, Boeing is still down 10 at 117. Wow. You remember my target was the 9-period exponential moving average, and let me move away from this 120-minute chart right here. I said it made a peak F. Looks to me like we're doing a very familiar pattern here. Cup formation, right arm a right shoulder failure pattern. If it closes under 115.14 in the monthly chart, that's not a good sign at all for Boeing. It's not a good sign for the general world economy. Okay, so now let me come back here, SPX.X. So the S&P has the, let's go to the 9-period moving average. 9-period moving average is right there at about 1900. It's at 1893 right now. So it's got a bit of work to do to get over that 9-period moving average. But look how nicely the 9-period moving average is acting both as a magnet, but also as a repellent. As soon as the S&P, and I'm suspecting it will do that, and it might not do it for that long, but it should do it. As soon as the S&P goes above 1910, closes above 1910, it means all of a sudden you've got upside targets that you can start talking about. Meantime, it's a little long to go 3 days, and maybe 4 days if it's not today, without making leg B. So I'm watching this real closely. Support in the 1887, 81 area. That's going to be really important to hold. Let's go to the QQQ, 1, 2, 3. QQQ series trading at 101.72, down at 141. Now, this is very interesting. You see, the QQQ series, the power shares of the QQQ Trust, has had one of the most magnificent moves to the upside that you can ever comprehend. Because if you go to this, I'm going to squash 1, 2, 3. Look at that. 120.50 was the all-time high back in March of 2000. It goes down 83.6% to 1976 in October of 2006, has a series of Chapman wave buy signals that go to a peak D in October of 2007 at 54.70, plummets down to 25.05, and now is at this is really a spectacular move, and it goes all the way to the most recent high was in December, I believe. Yeah, December at 115.75. Never made, that is 5 points extra to go to an all-time high. And so this is very good action, but it's starting to lag because of these big NASDAQ stocks and the NDX 100, actually the NDX top 100 stocks. I would even say the select four. And what is it, FANG? So we've got Facebook. Facebook comes out with earnings, I believe. Not great action at 96.19. Peak F top in the weekly, peak E in the monthly. I'm watching these so closely. Amazon, same thing. Peak D in the weekly, peak D in the monthly at 696.44. Stalling. It could rally, but it needs to find some support. Definitely mustn't close under 555 because that'll be under the monthly 9-period moving average. Netflix, NFLX. Netflix, same thing, peak D in the monthly. Technicals are still pretty good, but that peak E double top in the weekly says, watch out, there's a really good chance that Netflix wants to test the 85.50 low of the August 24th smash to the downside. Okay, that's a G. G is Google. I always put Google because I can't stand the name Alphabet. Google, still one of the better stocks, acting very well. Monthly charts looks good. Weekly charts only had a small pullback, but it is tipping over. Got to be real careful. So that's that. Let me just quickly do the dollar DXY here. The music coming up. The dollar is down 29 cents at 99. It's really struggling to get to a leg D at over 99.80. And gold, we'll talk quite a bit more about gold when I get back. Gold is making a potential peak D in the daily, holding very, very well right here. Basil Chapman, Tiger Technicians Hour, Dow's down 105. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, so we're back. Let me just finish this off because I want to talk about something. So we're going to go to gold. Look at the price of gold here. This is the weekly chart. There's nothing here that we haven't seen before. There's just one difference, and the difference is that the dollar is getting closer and closer to an area of very strong resistance, number one. And number two is that there's just been a very slow, quiet buildup in some of the gold stocks that have done very, very well. But it's mostly this tiny little candle here that I often look at when I'm looking at very long, not often, over the years it's often, but it happens very rarely. That I look at when I'm suspecting that there's just a chance that we could have, because of market conditions, we won't get the V-shaped pattern, but we could have a pretty decent rally in gold before it comes back down again. And that little tiny candle is the clue. That's the candle from last month. So I'm watching it. We're at 9-period exponential moving average resistance in the monthly chart. Weekly chart is good. It is something I'm kind of wary of when you get to a peak D. That doesn't matter whether you're coming off the bottom or not. But of course, when you're coming off the bottom, you can make 2 or 3 peak Ds, right? You make your peak D, you consolidate, then you start a brand new move up again, make another peak D. So we're going to be watching this. There isn't much resistance on a price basis, but there is a lot of resistance if you're looking at both the 200-period exponential moving average, that's at 1130 on the continuous contract, and if you're looking at the smooth moving average right there at 1134. That's the simple, is the one that most people look at if they're not aware of something called the exponential. Exponential I love because it puts the greatest weight on the last close. Now, just for those of you who are trading, just real quickly, this is leg C now in the 120 in the 1-minute chart. That's not the issue. The issue is that there's an improvement now in the 10-minute chart, but not until this is a series of resistance. We're in leg B. This is fabulous action, I must say, considering what could have happened with such bad news with some pretty key stocks when you're talking about Apple and you're talking about, there we go, Boeing down so sharply. So far, I'm kind of impressed. And we remain long. We've raised our stops. It's just an easy thing to do. You got in position nicely, and now you have a little bit of flexibility. We'll see what happens. Okay, so this is gold at this particular point. We have a gold stock, unfortunately, has earnings coming out, and the earnings, how can the earnings be good? The earnings must be horrible. So how it reacts, we're kind of vulnerable to that. Had a spectacular rally yesterday. It's had a nice, this morning it's even up, even with the news of its impending doomy outlook when the earnings are out this evening. We'll see what happens. Okay, now what I'm looking at is, so gold is acting very well based on the continuous contract, the GLD, all-season leg D, maybe a peak D today. But look at the MACD, 87%. MACD strong, stochastics at 80%, 87%. It's this U-shaped pattern that I see in the gold weekly, and these can continue for a long time. Look how many times you've made these U patterns, and they keep going to lower lows and lower highs. So I'm just treating this as if it's possibly the start of a more intermediate term, 6 weeks or maybe 2 months of movement to the upside in gold. We'll see. Meantime, back at the ranch, what we really want to be looking at is this. Boy, just stand back. Here it comes. Look at this chart. It's a chart of a picture. And what is the picture? It is a picture of, anybody recognize it? This is right there. You see that little arch? I always talk about arch formations. That's an arch formation. That is Rose Wharf. Spectacular building because you can see the water from when you're driving by an Atlantic Avenue, yep. And this is from the other side. This is from the seaport area. In fact, what it is it's from the seaport's newest high-end address already sees units resold. Wait a minute, it hasn't opened, but they're flipping. Boston's high-end housing market is so hot these days. This is from the Boston Globe. Tim Logan. Globe staff, January 26th, that was yesterday. Boston's high-end housing market is so hot these days, even new condos that haven't been lived in yet are being flipped for big profits. When they say big profits, let me explain what I mean, what they mean. That's what happened at 22 Liberty, a new glass-walled condo building on Fan Pier with views of the harbor and the downtown skyline. The view is spectacular. I must tell you, it is just a fabulous view. When you go to any of the buildings in that area, even the Children's Museum has a spectacular view. So this is something. So 6 of the 118 units were sold by the original buyers before the building even opened at the start of this year, each one for at least $500,000 above the original price. So this is the Boston Globe. So I always put my comments in. And one of the comments, flipping a building that has not yet been opened for a mere $500,000 profit, not bad. That was once the sky-high price of a building, let alone the profit on a $3 to $4 million condo. A $3 to $4 million condo, one that has never been lived in. Can we say top coming to Boston real estate? Wow, it is a spectacular view, though. Still, this is somewhat disconcerting. And it upsets me. It upsets me because I've been here a long time. I've never yet been in Boston where you don't get some major market top when you start to see this kind of exponential rise in properties, property values, etc. However, we're just dealing with this one step at a time, and it doesn't say it's going to happen today. It doesn't say it's going to happen this summer. I have my ideas of when I think it's going to happen. I also have all these things are coming together so nicely that I'm getting very concerned that I must be missing something. This is all part of the mega move still to come. I still think that after this big correction, which could last a little while longer, that we have some crazy, I don't know what it could be, Fed-related, whatever it is, spike to the upside, and it'll be very selective, but it'll start to get the public in. So we'll talk about that. But meantime, we've got to wait and have patience to see when we make a pretty decent, not a low, but the low, if we can time that. So in the meantime, back at the ranch, we saw gold, we saw the dollar, DXY, dollars struggling, but it hasn't made that 99.81 for leg D in the daily. But the real thing is, can it get to 100.52 to start leg D in the weekly, and then you're going to be seeing something very different. It happens next week. That'll be leg D in the monthly chart. And then I have to say, you know what? I'm starting to get signs for the very first time that say the dollar could be stalling, looking monthly now. I'm not talking about next day or so. I'm talking about over a period of months. And that gold could finally have a really good move. But we'll talk about that as the time comes. Meantime, let's get back to our story here. It was Larry Pesavento. He had 5 of those units. Gosh, Larry, I should have known the timing was just perfect. Good eye and good trade. So let's go on. Most importantly about what I'm seeing is, if you've got Boeing, and you remember Boeing on the way up, it was just like a rock. Not like a rock, like a rocket. When it made that move in 2000 and late 2012, starting in 2013, and it went all the way from the 77-ish area to 144, over a double. That was amazing. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, let me just get to a couple of things here, a couple of questions. The one was Procter & Gamble. Yep, Procter & Gamble is acting very nicely. Well, oops, it just disappeared. I hit the wrong thing. 161. Don't get excited. Just do it slowly. There you go. Procter & Gamble, PG, here we go. Up 37 cents to 79.18. So these are the defensive stocks. Remember, not defense like Raytheon, but defensive. Procter & Gamble. K is Kellogg. Look, holding very nicely. Usually they put Coke in there, but I'd say Coke. Yeah, maybe. PG. And then you get the like Verizon, defensive. Dividend stock, beautiful actions, up 69 cents. Telephone, which we own, had earnings come out yesterday. The earnings were good, but the outlook was not great. But it's doing great. It's up. It's almost back to even after being down almost 80 cents. Like its action. Yeah. So there's a defense. The question is, when we are looking at. I had a question in the den as well. Basil, I asked, what's the weakest sector? I said the weakest sector is probably the IBB, the biotechs, for the reason that I've outlined for months, almost a year now. And I've been talking about it as the sector that I think had overpaid for buildings and buildings and buildings. That means they also overpaid for all the administrative costs and all the personnel. They had that. I also said I believe that with the sell signal that I had, politically we will start to see in the book, in the chapter that I wrote in the book called The Psychology of Investing. I talk about when a trend changes, that's where everything goes against the trend. And it's like, in your own case, if you have a position and you overextend yourself, you're doing real well and you think great, and now all of a sudden you quadruple whatever it is. And then it goes against you. At that point, everything goes against you. You're about to close the position, the doorbell rings, whatever it is. You think, okay, I'm okay. And then the next thing is there's a massive sell signal or a buy signal that goes against you 8 points. And that's exactly what's going on in the IBB, because politically and economically, in terms of the drugs, they're going to be hammered, especially here with Markey. Markey's the guy that when the horses left the barn, when you find the horse up in the North Shore somewhere, kind of lost, that's when Markey jumps on and he starts all this legislation. He's done it for decades. He just always does that. So this is it. So I think they're in trouble. So that's the worst. Then the question was, what's the best sector? Well, I think that there are a couple of sectors like defense is doing well. I wouldn't call it the best, but it's holding the best. What I do think is that the Dow, for the very first time, as I can recollect, maybe early 80s it was the same. This is the first time that I've really liked the makeup of the Dow. I call it equilibrium. You've got Apple, American Express, Boeing, Caterpillar. Horrible, horrible. But then comes Cisco, CVX, DuPont, not so good. Disney, not that great. General Electric, doing much better. Goldman Sachs, not so good. Home Depot had a great thing. But then it gets evened out because all of a sudden you're getting a little bit of buying in the oils. So Exxon and Chevron come on strong. I think this is the best balanced Dow. So that's the question. The question was, could I explain? And to me, what I'm looking at is that for decades, they've always taken the best, taken out the worst in the Dow, and then put in the best, the current best. And the current best lasts for about 6 months, and then the current best turns into the worst. That's what happened when they put in Cisco. You remember how Cisco came down, etc. But at this particular point, you've had, I hope they don't change any of the weightings now for a while. You've got, I like it. That's all I can say is that I think it's, and even now, look, the Dow is up, down 41, it's down 26.26, and the S&P's unch. And this is with massive selling going on in the Dow. I like it, and that's the way it is. That's the reason why we're long the Dow, and very long the Dow, I should say. It's unusual for us to be this long, almost any position, in fact. But I want you to be very selective, fewer long stocks, but I just wanted the index. We'll see what happens, hey. So I hope I answered that question. Now look at the breakout from the left side, right side price time match that you've got in this 1 minute chart. You've got this leg D just extending just fantastically. This is beautiful. So you had one buy mode that went to an E and pulls back. Have another buy mode that went to leg D, and I think we're getting close now to a little bit of resistance, but this is fabulous action. So I hope I answered some of those questions. Next thing I have here, yes. So now let's go back to what I wanted to look at. I didn't do anything with the bonds. Peak D in the daily TLT, the Lehman 20-year T-bond fund. But what's most important is that bonds broke out of the asymmetric triangle to the upside. And what it's really saying is, if you don't mind, I'm just going to go to the very long, I didn't do that yesterday, I'll do it now, TYX.X. This is the 30-year T-bond interest rate. Look at that. Look at this, and I'm going to squeeze it. Squeeze. Dave White always calls himself the shaman guy because he's squeezably soft. Look at this. This is the 30-year Treasury bond interest rate. 1981 all-time high current to the current price. All-time high. Well, it gets smoothed out, but let's just say that the all-time high was at 152. Round number 152 opens at round number 151. So, but it gets smoothed out, so maybe that wasn't the case then. But look what happened. It went all the way down to 22.6, 22.26. And it's still in the down channel. You remember I spoke about the Japanization of our bond yields? I talking about it for about 10, 12 years. And I think it's still going on. I think the Fed is going to have a terrible time raising rates. If they do that, this market then becomes vulnerable to a pretty big, a further slide to test the October, the February, March 2014 lows. But in the meantime, look what's happened. So now the yield's a little bit higher than TYX. It's got plenty of room to make another arch formation. We'll see. So I wanted to show that, and then I want to get out of this chart to show you something. This is what I meant to show you yesterday, and then I ran out of time because I had questions. So close workspace, yes to all. And now I'm going to put this in, and look at this. This is my long-term chart. I love this. It'll be black, so I'll have to expand it so you can see it nice and clear. I think let me just check here. I believe, wait a minute, where did it go? Oh, that's so slow. Okay, so this is the wood, which is the iShares, the Global Timber and Forestry ETF. And this is what makes me real nervous about the intermediate term, that is the first 3 months of this year, because that's gone from 56.69 down to the most recent low of 39.29. Let's call it 40. So that's a 15%. That is a big haircut. That's a 1/3 haircut, I believe. And if that's the case, then you've got to recognize that this is feeding the housing sector. Now, I don't know if there was a good report in the housing, but look at the housing sector. This is the Philadelphia. That's a weekly chart. This is the weekly chart of the Philadelphia housing sector, which went from a high, most recent high of 252 to the low last week of 186. I would say that that's a pretty big decline. So that makes me kind of nervous. Hey, we've got a break coming up. I'll be right back. Basil Chapman, Target Technicians out. I'd like to hear from you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we've got a couple of questions about oil and the S&P. I'll get to those. What else? There were three of them. Oh, and the DRD gold. Okay, yes, I'll get to those. But meantime, we've got Brenton Martinez, California, CDE. I'm looking at Core Mining. Oh, it used to be Coeur d'Alene. Now it's called Core Mining. Yes, Brent, what are you doing? I know what you're doing. You bought this. You bought this between $1.73 and $1.79.
We're not quite that good, Basil. I appreciate the thought. It was $1.90 was my buy-in.
Oh, shame. $1.90, and now it's at $2. So it's up 17 cents, at 9.2%, just in a day. So, folks, we're looking at a stock. It was once upon a time here in the den, here in Tiger. We used to be talking about this a lot, way back, 2004. It hit, I think this is a 60, yeah, that's right, it was. It was a $76 stock, and it had a little problem in that it did come down a little bit. So it came down from 60, what was it? Did I just say $67? It hit $1.62 the other day. I'd say that's a little decline. And now it's having a tremendous rally from 162 to 201. 203 is the high so far today. You know, Ben, this is one of those, for some reason, I just completely forgot about this. I was looking at a list the other day. This one just went off my radar. But the most important thing about it is that in the repair work, in the time that it's taken to try to garner some kind of credibility in the chart formation, the moment I picked it up, I just glanced at the technicals here in the monthly, and the technicals in the weekly, and then the technicals in the daily. But it was the daily that said to me, wait a minute, that was a very smooth rounding bottom in the stochastic, and now it's suddenly jumped to 20%. I like the 20% or greater move off a bottom. That's really important in my work. And this is the kind of leg B that I like. Now, we know that charts, when they're coming off bottoms, can struggle sometimes, or they can make a V-shaped recovery. If you look at CDE, which is, let me just finish this up here, which had a fabulous move earlier on, almost the same kind of technical outlook, and then it failed at a peak C minus. If you go back to, on the 18th of November, at 234, it started a fabulous move. It went spike up to A, but then it gave back quite a lot. It had another move to an A, but it was an A underneath the previous A, and it pulls back. And then you get a combined leg B, and then it pulls back, holds the 9-period moving average, spirals to a peak C. Well, 234 to 286 is a very nice rally, but it's visually much more exciting than the one we're looking at now. But the one we're looking at now is way more percentage, is a much bigger percentage gain, going from 162 to 203 in a very short period of time. I like that because I'm seeing the histogram improving very nicely. I see this is what you didn't get before in the low that was made back on the, what did I say, it was November the 18th. Now you've got the on-balance volume making a V-shaped turnaround. So I think that even if there is a pullback to 190, the 9-period exponential moving average, the way it's coming off now says that on the daily chart, it looks more like this is one that has the potential in the waveform to get to a C and probably even get to a D. Now, if the D is correct, that D should come in somewhere around between 220 and 224, maybe even a little high into the candle of the 11th, which can go to 234. If it does that, and it does that by Monday or Tuesday of next week, that's a compressed, that is like a spring pattern where you've got a compression at the bottom with the technicals, as you can see them group over here at the bottom, which is not what they did before, the one in November. This time they're grouping together and they're moving together. I like it very much. My biggest concern with this rally is that if the dollar does complete a move to the upside, that's a lot from 99 to 100 and 100.52. Even though it sounds like, wow, what's the big deal? It's only $1. Wait, is that, yeah, $1. Really what you're looking at is that the strength of the dollar could impact the commodities. But my suspicion right now is that I think we've got a turn in the commodities. That's the way things are looking. So I love that you got the entrance. Is this your full position, or are you going to add to it, or what?
This is it, Basil.
Okay, so if this is it, then I'm not going to make any other suggestion. I would normally say I love the entry point. I would not want to take a loss under any circumstance, but you might actually, in this case, there is a chance that you could pull back a little under 190, just one time. It mustn't be for more than 2 days, and it better not be under 182, 186 actually, and then it needs to make a new recovery high. But under these conditions, the way you entered, there's a chance that you might not be able to get back in at $1.90 if there's barely, look, the Fed comes out today, gold is rallying, something's going on. Well, rallies, gold's coming off its lows, but the gold stocks are acting very well. So I like the fact that you got in. I would only make one suggestion to you, and that is, if this does come back, and I don't speak to you within the next week, and it starts to pull back, and it starts to close underneath 178, even though it's made a low, that would not be the action that I would like to see. This is the move that says you don't have to spiral up in a V-shaped pattern all the way back to 260 in CDE, but you really have to hold support in the weekly chart. The high that was made last week of 194, that really shouldn't be taken out in the weekly chart. So I just wanted to say that it's a nice takeoff. And you heard me talk about that little doji candle in the monthly chart, the tiniest little candle. Those really tiny candles sometimes can have the same impact on a monthly chart that when you get, look at this. Actually, while we're talking technicals here, let me just show you something. When we made that, I don't know if you recall, back in October of 2011, almost all the index charts had a monster engulfing candle. That engulfing candle turned out to be the low. Not only was it the low, but it was a major low for a multi-year rally. So if I go back, I wonder if I'm able to find it here in the Dow chart. Let me give me a second here. You know what? I'm going to have a look in some of my charts. Oh, there it is. Maybe this is it. Let me expand this chart. But there are times There are. There's a little doji candle back in October of 1990. And that little, it's really not, I'd like it even smaller than this, but this is the kind of candle that I'm talking about. It's what I call a silent candle. It is really quiet. Nobody's talking about it or anything. That candle can often produce a very nice monthly turnaround. I don't know if that's happening now in the gold, but there are some very nice positives going on. So I'm hoping that your entry point is not seen again for a long time.
I hope you're right, Basil.
A lot of hoping there, but you know what? You've done the move, you've got in, and it's acting well, and that's really what you wanted to have as your initial takeoff point. Congratulations.
Thank you, Basil. I always appreciate all your analysis. Very
Thank you very much. Thank you, Brent. Have a great day. Folks, the Dow's up 28, the S&P's up 8 points. Nice turnaround. We'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Yesterday, I believe it was, why I was talking about Dow 16,500 to 600 as extremely strong resistance. So I'm not sure I'm going to be able to do this right now. Is that it? Yes. The reason why I did that is in my newsletter, what I do is I show this every day. Let me see if I can find it right now. Yeah, okay, this is a little bit, maybe this is better. I'm not sure it's easy. Anyway, so I discuss, I type in here what I'm looking at, and then I'm typing in here, and I discuss what I call the gray leg B. So this is what the question was: how did I get the figure on the left? Well, the way I got the figure on the left, and you can see I drew it in there, I talked about the match between the slump in August 24th, and I talked about a very different kind of characteristic of this, but it still had the same yellow oval that I put in as a match. I called it a match to that. And now what I'm looking at is a bounce. I don't think that we can take off like this without retesting at some point. That's number one. The reason why we wanted full position in the 3 times along the Dow, and I explained that yesterday, was because I want to peel off. We've already taken profits once and we're back in again. I want to peel off on the way up. And then I want to be thinking about, is this the time to short? But there's a chance, and I'm only saying there's just a small chance, that like March the 6th of 2009, when we got into the Dow Diamonds, I kept raising the stop, but it never got taken out. And the darn position became an 18-month position. Wouldn't it be nice if we still had it? But yeah, what can I say? That's the level I'd expect the greatest resistance. To get there, we have to close in the 16,000, the high 16,200s, and be able to hold that. And that's really the issue. So I hope I answered that question. How did I get the figure? I got it by the resistance points over there on the left. I've also got a price time match, and that price time match says that by the 1st of February, that's early next week, beginning of next week, we should be at least trying to test that level in the V-shaped pattern. And then what will I do? You'll see me start to draw the arch formation. And what I talk about is in the market, there are always fighting patterns, long and short. And the pattern that I'd be looking for is the Chapman wave inverted falling axe formation. So the one that comes down like I usually do, like you remember I drew it here, I took it away because it was getting messy. This pattern here, I wonder if you can even see it, that declining arch formation, declining cone formation. I'll be doing it here, and I'll be doing it with a trend line there and another trend line that goes sharper. And what happens is if it starts to fail, goes under the 9 EMA and then under key support level, you can expect there's going to be an H pattern, lowercase h. But if it starts to move up with the technicals improving like they're doing now, this could go even higher. So far, I remain in the bullish camp on the short term. I don't want to even go further than that, okay? I hope I answered that question. Next question is the question on the S&P or the SPY. Which January monthly end candle to close above to give possible February rally? SPY 188. So let's go to the SPY, SPY, and go to the monthly. I'm not really dealing with the SPY monthly right now. I have to wait until Friday at 4 o'clock because it's getting that Roman candle. Look, another Roman candle says, be careful. You could be testing that trend line. So I'm going to go to the weekly. And the weekly, I've already drawn it in. It's at 190. There's 9-period moving average resistance at 196. Where's 196? It comes exactly in right there at 194.86 to that candle of 197. So in there, you've got one little candle of 195.85. So I would draw in, I'd grab my tools and I'd go right there and I'd say the same thing as the Dow. So I'll be back. Basil Chapman, Tiger Edition's hour. Dow's up 27, S&P's up 7. Be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,